How are you today, Matt? Panama, how are you? I'm hoping you got through the Panama Canal okay to make it to F.A.C.E. I'm just looking to see if your mic is unmuted. I'm unmuting you. You have to unmute yourself. Not sure if you called in. I see your screen.
No, he's self-muted on the right-hand side. There is a button to unmute.
Yeah, there you go.
There you are. There you go.
Okay, you see me now, right?
Yeah, and I see. What are we looking at? Your phone, buddy?
Yeah.
Okay, so you could show the charts that are on your phone.
Yeah, I've got this is an S9. I've got all the latest updates, so I don't know why it was having so many problems getting in. I was in here. I was in here like 15 minutes ago under Panama Orange. Did my name appear at all, or I could hear you talking about the?
No, it only showed up. Yeah, because I can just search, and there was no Panama, but it came up. Matt R is how it came in. Okay, so that's why I couldn't find you. But anyway, you're here.
I am here. Yes.
And what an exciting time to have you. You know, Panama keeps in touch with me on Twitter when he sees things and puts out some real interesting technical work. It's you know, almost like, you know, artistry as well, and has a view on the market. I believe I can label you as a precious metal bull, can't I?
Well, depending on time frame. Yeah, I mean,
okay, everything's dependent on time frame. Yeah. Okay.
I became one back in 2015, late 2015, just because almost every other asset was in such a bubble relative to metals, and it still is. I mean, that hasn't changed, even though, for example, housing stocks have crashed back to their highs from 2013. Or the XHB had, at least he did. But just to give everyone a quick, you know, biography, I was, you know, how I ended up in trading. Well,
you want to show a chart while you're sharing your screen, even if you're not talking about it right away, because this will be like right on the video, just showing your phone. You may as well get to what you're going to address first, so people have something to stare at.
Well, what I'm going to do here is I'm actually going through my Twitter, just because you could do this yourself if you have a browser. It might look better than coming through the screen here. And
well, let's see.
Because what I did last night was, all right. Now, if you go to twitter.com Panama Orange, you can see these charts a bit more clearly, because I posted 4 of them last night in reference for today. Just as
they're pretty small. Can you enlarge them? And you're only on part of the screen. Why don't you?
It's a phone.
There you go.
Coach.
Beautiful.
Yeah, but yeah.
It's a what, Steve?
Yeah, it's a phone. So you know, if you switch it, to the other direction only, we can see it bigger. Yeah.
Okay. So you want to talk about the civilian labor force, and like a lot of people have been saying for years, you know, the numbers aren't real. And it's interesting that even on charts like this, you look at technical formations when they're data points. So, you know, I find that fascinating. You can chart anything, can't you, Matt?
Well, you can, and you know, a lot of people make the point, or bulls make the point, well, the labor participation is dropping because of the, you know, the percentage of older Americans keeps going up, and we have, you know, a lot of baby boomers retiring. But this is the labor participation rate for people aged 25 to 54, which shouldn't be dropping. There's no reason for it to be dropping unless we have a draft or something, or a mass die-off. And it's making a third high as it has since shortly before 2000. Another lower high. It's making a bear flag, and that really kind of belies the idea that the labor market is hot and it's completely, you know, we have full employment and unemployment's under 4%, all these, you know, nonsense figures. I mean, unemployment's been dropping for years and years and years because people were falling off the unemployment ranks. It only counts people who are laid off in the past few months. Once you hit your last day of benefits, you're not counted anymore. But just to squeeze in real fast, if people who didn't hear the last time I was on your show, a biography, how I ended up in trading. And I'll fit this like in 1 minute. I'll try to really fortune cookie Reader's Digest this. I was on the police during Hurricane Katrina in New Orleans. I joined the police there 3 months before Katrina, and I was there for the whole thing. And that really kind of gave me a framework for seeing how bad things get when strategy isn't used properly and when the authorities don't have their act together. As we all saw, in the 2008 crash, of course, but what I saw in Katrina was a bit more visceral as far as the effects of it, and that really got me thinking about strategy and economics later on, and the fragility of systems. And by no means has that made me a perma bear or anything, but it has made me question, the official line on things and how things are presented. And the funny thing is, it's 2018. It's very easy to find all this data yourself. And there's a lot of people who do. You don't, maybe 15, 20, 25 years ago, to do economic research, you had to subscribe to all the good journals. You had to have good services. And now it's anyone could just find out that most of the things you hear aren't true yourself if you take the time. But of course, there's a real trap with that, because you have sort of these titans of alternative news like, Zero Hedge and all these alternative news gurus, and they fall into the same trap of groupthink themselves, because as we saw just recently with this like 75% drop in cryptocurrencies, all the alternative news icons were pumping those cryptocurrencies at the top, as they were, with precious metals at the top in 2011. But once again, they've shown that just like mainstream news.
That's because they're getting advertising dollars from people that have that business model or those instruments as part of their business model.
Oh yeah, and
advertisers, etc. So that they have a budget when there's a mania going on, right?
Yeah, it just goes to show how you have to really be careful with any
discernment.
You have to do your own analysis.
Yeah, discernment. Some people call it due diligence, Matt. You also have to be very discerning in what you take to heart as gospel, and right. Look at things from a few different sides. So now you're showing wage growth kind of looks similar. Can't we break out to the upside here in wage growth if Trump gives the middle class a 10% tax cut?
Well, here's the issue when it comes to, what's real wage growth going to be. We have the dollar has just been parabolic recently. So in real terms, that means, your actual buying power is up. But we have the national debt now breaking like 22, 23 trillion. With all the tax cuts, we know it's going to go straight to 25, because remember, the corporate tax cut a year ago was supposed to pay for itself and start paying down the debt with economic growth, and that never happened, and it never has happened with a tax cut like that. So we're going to have a national debt running to 25 trillion really quickly. And, that all does tie into exactly why things like gold and silver are so cheap at these levels, because gold, you could just see fundamentally, there's a good show on Discovery Channel, the Gold Rush Alaska. It's been on for years.
Oh, yeah.
And there's a lot of good miners on there who work really hard. They know what they're doing. They're very competent. They're working 16 hours a day. They're pushing their machines till the machines explode in their face. And they cannot make money. They cannot make money at these prices. No matter what little fixes, no matter what they rig up, no matter what schemes and they're doing the best they can. It's in no way.
All right, so for like I'd call this like a prop shop of miners, right? They're professionals, but they don't have scale like the miners. What's their production costs on that show? 1,200, 1,300, 1,400 an ounce?
They go over their oil. Believe it or not, I'm in my car right now because my Wi-Fi.
You're not driving. You're not driving.
I'm not driving. I'm parked.
All right.
But now Now there's leaf blowers, so I'm going to have to drive around the block to get away from them while talking to you here.
Okay.
God damn. Just as I'm doing this interview.
Who invented those things anyway? Huh?
I
The leaf
don't
blower.
know. There's a really good
He needs to spend time in purgatory, whoever invented that, for all the purgatory gives us every time I hear one. All right, so you're a bear on the economy, and lately the news is flipping a little bit.
For a variety of reasons, not just Democrat. But the thing with what's going on with employment is, politically, it's not really the fault, or there isn't really a political solution. Like you've seen a lot of, Trump complaining about Amazon, and he wants to stop their deals with the post office, and that's such a small part of Amazon's business. So even though he wants to do something to curtail or keep Amazon in check, he has no ability to do that. They're more powerful than any nation state at this point. And we see with our own eyes, if you go shopping at any shopping center, and I mean a good shopping, so like one that was healthy in an economically robust area. We have one, like right in my area, there's one called Village Crossing. It's huge. One of the biggest shopping centers, like in Northwest Illinois. And you go around it now, and 2/3 of the stores are empty. And this is not in a bad neighborhood. So you have the collapse of the brick and mortar retail model, as we're seeing of Sears, as we're seeing of 50 other companies. But it's happening in such a slow fashion where they're not all blowing up all at once. And so people, it's because of that slow motion train wreck, people were kind of they're underestimating how much structural damage that's doing to employment, and that's exactly why labor participation for prime age people, which is the real unemployment rate. We can debate all day about broad labor participation and if that's retirement, but people are not retiring. Most people are not retiring at 53 or 27. So there's clearly, we do not have a booming jobs market. It's nowhere near the last two booms.
So what about the argument that it's just that these people don't have the proper training for the jobs that are available?
Well, there's only so many people that are going to be able to develop apps and, live in San Francisco with a $3,000 rent. And that's increasingly a narrow scope of these new tech jobs that are being created. But I'm just going to bring up a market chart here. This is this is actually before the drop happened, but just, people keep talking about the double top we're forming in the S&P. And it's not actually just a double top. Also on like the weekly and daily, you had this bearish rising wedge.
Yeah.
But more importantly, you had this what is called a big M top, which is an interesting pattern because it's a double top that looks like an M, and when you get to the second phase, you get that really steep drop, which we've kind of done so far. Now all these technicals look really bad for the S&P short term, but of course, fundamentally, if the Republicans hold Congress by one seat, because most people are expecting them to lose the House, if they hold by even one seat, 2 seats, whatever, or 13 seats, which I think is possible, as crazy as it sounds. In that case, we're probably going to go up and retest all-time highs in December before the end of the year. I do think that will come right back down. Maybe not as fast down, but we will. That push will fail for a few reasons. For one thing,
hell of a relief play. Or couldn't it be just a failing rally? Maybe not make new highs and maybe rally back to 2850 or something like that, a lower high.
Yeah, it could just get close. But the thing is, first of all, the Fed, I think they're going to push rates to maybe 5%, even though housing is flailing. And the reason they're going to do that is because all the elite, all the people with the money, or the super elite, they've accumulated so much real estate at this point that they can't lose it even as rates go up. You'll lose your house to the bank, but the bank isn't going to lose that real estate. So the Fed's happy to try and shake people out, push rates to some crazy 1980s level, and cause a crash because their friends already have so much, the Berkshire Hathaways, they have so much property that they don't need to accumulate any more property. But whenever there's a crash, as we saw in 2008, the rich get richer by a substantial amount. So they could be trying to set off a crash intentionally. Now, you see, well, they're trying to set it off to hurt Donald Trump. Well, yeah, but there's many times in history they've set off crashes to just help themselves, with or without the president. Sometimes it's just it's to their own advantage to do that. No matter, even if Hillary had gotten elected, they might be doing the same thing. But I'll tell you, the thing with Trump.
What's the advantage of the Fed, for the Fed or for anyone else, setting up a crash besides what you say is people can buy up assets on the cheap?
Sorry, Coach. I want to add to that because I was about to ask. To me, Tom, it makes no sense. Matt, sorry, seeing the Fed raise to 5%, and I'll give you 3 different reasons. Unless we see a breakout of inflation, that they can then excuse it on that, and that's going to be a pretty good damn excuse. But so far, we've seen the government, all governments, do their best to actually hide inflation in the way and the methodologies. By shifting the way and the methodologies, they dynamically calculate inflation. So they've been doing the exact opposite. They've been always giving a good excuse not to raise rates and not the opposite. But other than that, how exactly is the Fed going to reach 5% when there is no single member of the Fed that is projecting forward a rate more than 3.5, 3.75%? So, the average of what they consider now normal rates is like 325, 350, and the economy couldn't even make it to that the previous time in 2008 when the fundamentals of the economy were a lot stronger than what we currently have. So I really fail to see how that might be even close to possible of happening, because I believe the market is going to be in full panic and breakdown territory a lot long before they even make it to that. Yeah, exactly.
What do you say?
Well, I believe, like we saw in the 80s, or like what was the height of rate? Was it 12%? It went to some crazy level.
We had short-term rates at 19%, and I think bond yields
22%.
Yeah, bond yields were like 16% on 30 years or something like that.
Yes, something like that. Although, Coach, there is a little thing, because people that that only know the let's say just the key points of economic history. First of all, and second of all, keep in mind that there was something very important back then. The duration of the U.S. debt was high, which means that when they actually raised rates that high, it didn't affect so much the cost of borrowing, because the maturities of bonds back then that the U.S. had were actually high. Now
long term, you mean? More long term?
Yeah, more long term. The duration was a lot higher. So now we have the exact opposite situation. Trump as a candidate, another discrepancy. Trump as a candidate was saying and was blaming Obama for not borrowing longer term so he can actually increase the duration, the maturities. And during his tenure so far, the maturities, the average maturity of treasuries has decreased even more, which means that by raising rates today in comparison with back then, you will be feeling the pain immediately. Yeah, you will be feeling the pain immediately. Exactly.
Well, he's the king of debt, he said, our president. and now he presides over an empire of debt.
And also he started,
what a great fit. Go ahead.
He started the public fight with them, trying to pressure them to do what he wants them to do, which is keep things easy and just to assert their authority alone. That's why they might push it at least above 4%, just to say, hey, we're going to show you in charge. And it's really, because Trump's argument that this is the best economy ever, if that was true, then he wouldn't need to worry about the Fed. The Fed wouldn't be able to hold the economy back. They'd be trying things, and the economy would just be roaring ahead, and they'd be tapping on the brakes and would keep going. So clearly the economy isn't as strong as he makes it out to be. Like
on that, Matt, we agree 100%. A strong economy not only can handle high rates, but a strong economy actually needs high rates because
thrives on
that it thrives on them. Why? Many people don't realize the basic savings, which of course, when you have more, is actually the steam engine of investing. That's why you need to give an incentive to people to save.
Steam engine. Yeah, I like that.
Exactly. We have so much we had so much house flipping. If you look at the XHB, the monthly chart of the XHB, it has gone all the way back down to the highs of 20. If you bought towards the end of the year 2013 and bought it, that ETF, the housing ETF, you've now made no money since the year 2013. And people will laugh and go, "Oh, I don't know." Well, someone bought housing stocks in 2013, and now they've made no money since 2013 because the housing market was like becoming the core of the housing market. In fact, it still kind of is. That's become the main thing. There's a lot of people in their 30s and 40s and 20s where it's like they can't get another job, so they get some money from their parents or something and say, "Oh, I'm a house flipper. I'm a real estate investor." And we can't. The idea that can be, such a broad, an industry. Whenever that's become an industry in any society, in any situation, there's always some kind of real estate crash because it's not what you're supposed to do with real estate. It's not supposed to be. You should have a small percentage of the population working as brokers, flipping houses. But
you mean, Matt, you hear that more than people, millennials going to their parents and saying, "Mom, Dad, I want 50 grand so I could trade the guppy." And they'll go, "Guppy, what's that, a fish?" "No, Mom, it's a pound yen." So,
that's not what's supported by the television and the mass media. It makes house flipping look so easy. It looks so hip. It looks so culturally, the right thing to do. Yeah, trading
they even have that television station that runs all day that people watch. HGTV. Yeah.
And there's about 50 other shows on like 5 other channels of house flipping.
Do you think house prices can get hurt because as bad as they did in the last recession? Because I'm hearing people say because it's not a derivative problem in real estate that they're more immune in a recession to price drops. What do you think?
They'll get devastated because most of the real estate right now is held by people over 60, people over 70, and they're holding these houses where they have 4 or 5 extra bedrooms, and they're barely paying their property tax because property taxes keep going up because of pension obligations and just maintaining the roads. So we have a mass glut of real estate in this country. That's why you see these nonstop reverse mortgage ads.
Harry Dent says, houses don't die, people do. So the houses are still there long after the people.
There's way too much housing real estate that's in the sprawl, in the suburbs, that is not seeing jobs appear adjacent to those houses. We're not getting the new factories in the suburbs. We're not getting the new tech hubs in the suburbs. There's a few areas, San Francisco, there's a few other towns where when tech likes to funnel itself in just a few cities and pile up all the jobs in a little hyper concentrated area, the wealth does not get spread around. Now the wealth will get spread around in the sense that you'll have a relative who's driving 14 hours a day delivering Amazon packages, and they have them peeing in a bottle, or they're driving Uber 14 hours a day. And that's one of the things that drove this recent cryptocurrency, the bubble in Bitcoin, was all these poor people hoping they get a lottery ticket, hoping they get this investment where they can just get out of their horrible underpaid jobs.
Yeah.
And that's crypto. It is tragic because crypto, that bubble, peak to trough so far, has been as devastating as the 2009 crash, and it happened faster. And what's worse is the stories people were telling people at the top of $1 million, $100,000. They expected to have Bitcoin at $100,000 as I'm talking to you right now.
I know. By the end of the year, that was a call. You know what? I want to get to something real, and there's nothing more real than the archaic relic, gold. So looking at your gold chart here, Matt, underneath the smaller box shows a yellow line, neckline breakout. What price did that occur at?
Okay, this chart is actually from like 2 months ago, but the pattern has not changed since. And this is
where was the break? Where was the neckline? Where did that come in?
This is what you call a giant inverse complex head and shoulders, which is a inverse head and shoulders, bullish, but it has 4 shoulders. It has like 2 on each side, and so it's a little more powerful. It's a little more powerful. You could call it that. It's a few people talk about this pattern, like Bulkowski. He's got it up on his website. If you go into Google and type inverse complex head and shoulders, or complex head and shoulders bottom is what it's most often called. But the thing is, I think, if the Republicans keep the House by 1 or 2 seats, which they easily could, because now he's promising illegal immigrants, they won't have birthright for their kids if their kids are born here, and he's going to give he's making all these promises that might never happen, but that's, he's very, very good at just throwing things off the top of his head and getting. So let's say he keeps the House by 1 seat, and we get this panic sell-off in gold, and it goes to, say, 1130 to 1150. Well, that's where it went after he got elected in 2016. But if you look on the monthly chart of gold, that little blue box, the second to last blue box, that's where gold sold off after he got elected, but it never went and tested those lows from 2015 under Obama.
Yeah, that was 1050.
Yeah, it was about 1050. So
all right, so I'm going to ask you the question again. Where's the neckline on the chart underneath in the little box on the gold? Where's your neckline?
That's around 1130 to 1150 area. Just
the neckline?
The neckline, yes. The neckline is right around, if you look, because that was. Go ahead.
Okay, I would have thought it'd be well above the 1160 low. You know what chart I'm talking about? It's the bottom right little box, and you have a neckline there that it's already broken out of, and I don't think that's 1160.
Well, if you look down, I zoomed in.
The price?
If you look at the second to the, if you look at the there at 2016, at the end of 2016, it went all the way down to. I went back, looked at the price back then. It went down to like the 1130s. So it could go to the 1130s, and it will not have broken that low.
Okay. I'll ask you one more time. The reason I'd like to know where that neckline is and the so-called breakout that you have is I think that would be a good fail-safe point for if people are still bullish gold, if the breakout's negated, to get out of the way. And I don't think you can give me a price level on that, can you?
Okay, a negated, a neckline where the neckline would just be negated entirely. Well, I think that would be a monthly close below 1130.
Oh, okay. All right. Okay. I thought it probably came in higher, like 1200 or something like that, where it broke out. 1208 something.
Blue boxes.
I don't think you know. How about that? You're guessing.
I think if we go all the way back to where, if we go back here.
Well, I mean, you have the chart right there. The only thing that's missing is the price graph on the right to the right of it. The complex bottom, and you have a yellow neckline and an arrow for a breakout. That's the price I want to know.
Right. Well,
and you say that's 1160, which was the low of the move recently. It wouldn't be an up candle or bar. Anyway, okay, so you think that there's a possibility of one more washout, and it would be because the blue wave doesn't happen, and the stock market rallies and gold flushes and fade them both.
Right. That's the general thing I do agree on. As far as I just think fundamentally, as far as the cost of gold right now versus its mining, that is. What is going to make gold suddenly cheaper to mine, unless oil just crashes to $20?
Oh, there are some guys talking about that. I never thought about that. Yeah.
That just doesn't look like it's. I mean, oil. We haven't even started some conflict with Iran or conflict with like oil is trading as if we're in a war right now. It's so expensive, but we haven't even started one yet. So if anything happens where the negotiations for Iran go bad or negotiations anywhere go bad, oil could quickly go above 100 because nothing's shooting anybody, and if you look at the price chart of oil right now, you'd think we were, and that the price of silver and gold relative to mining it has never, it's cheaper than it was pretty much at any time. And relative to the cost of real estate, relative to the cost, when I mean real estate, I mean the cost of buying a mining strip. I don't mean like a house. I mean like the cost of, you're going to go out, buy all your mining equipment, buy your mining cut, buy, fuel up your trade. It's never been, the product you're putting on the market has never been this cheap relative to what it costs to make it. So
okay.
Let's back out of this.
Anything you want to wrap with, Matt? Do you have any kind of business model? Do you teach, or you just trade for yourself? Is that really what you mainly do?
That is what I mainly do.
Okay.
I taught, it took years to really get good at it by learning from a lot of different. I studied technical analysis. I studied fundamental analysis. I studied a lot of different types of technical analysis, like volume profile and chart patterns, and
well, you have a lot of followers on StockTwit. So let me ask you, why do you tweet? You're just a humanitarian that wants to help people and keep them informed, buddy?
Well, I do hope it has some influence on the markets I'm trying to trade. I do have almost like 30,000 people that follow me on StockTwits.
Okay.
This is just one last chart to squeeze in.
Oh, yeah, Litecoin.
Yeah, Litecoin, one of the few cryptocurrencies I think will survive. Litecoin will survive, Ethereum will survive, Bitcoin will survive, but it's getting so confusing with all the forks of. There's like 4 different forks of Bitcoin now, and I don't even know which one to deal with. But I'll tell you, Litecoin has a really nice. So does Ripple, but Ripple has a lot of negative. A lot of people have a lot of contempt for Ripple because it was created, quote unquote, by the banksters. And so I don't know, that could be a problem for Ripple, because a lot of people don't trust it, they don't like it, because it was like but if you believe that the banks are going to maintain their power, then Ripple's going to do quite well. But here's the thing, the Litecoin chart I'm showing you and Ripple, they both have about the same looking pattern, which is an obvious big, huge bullish falling wedge. It's like a year-long bullish falling wedge. And you have, mass capitulation in the crypto space after we had this, huge 75-80% sell-off. So it's finally, we've reached that washout phase in terms of sentiment, in terms of a setup and a chart pattern, where, here between like under 55 and Litecoin, especially under 50, I think it's actually a really good deal. And more importantly, between now and the election, which is very close, but I don't see an election risk with Bitcoin. I don't see there's some shocking news on what happened if the election and everyone's going to sell off their cryptos, or buy crypto. It might not.
Well, yeah, we had a pretty good test with the sell-off in the FANGs and everything else in the market. 12%, and a lot of things cratered 30%, and cryptos have been dormant. I describe them as like a dead patient with what their EKG would look like, dots.
Oh yeah,
no
and my call on them isn't that they'll necessarily go make new all-time highs, but even if they just dead cat bounce at following, say, this bearish falling wedge,
it could be a triple. But
it's still, that would only take like Litecoin to 150, and the all-time high was like 410 or 401. I don't know what the exact high was. It was around 400. We might never see that for 5 years, 10 years, but the triple or the double from here could happen within 3 months, 6 months, because cryptos, when they move like penny stocks sometimes, and that's also why they're not appropriate for this idea that all this institutional money is going to come, all this older money is going to come. No, because it's like trading a penny stock. And it's
people pay people to come in and create volume and buy it. They're with penny stocks, that's what investor relation firms do. They'll have a pool of money, and they're paid to come in and buy the stock so the insiders could get rid of some of theirs.
Right.
I know that business.
Well, it is tragic, because I saw a lot of people in the alternative news, quote unquote, community on YouTube, and they chased crypto to make up the money they lost in precious metals, and they lost more money in crypto. And it's like, what? Yeah. And now down here, it's like,
it is a nice wedge.
Yeah, I'm sorry it keeps flipping. Like when I'm holding my phone to my face, the gyro sensor in the phone keeps flipping it horizontal. But just by the way, this is a Galaxy S9 I just got, and it's like more powerful than my laptop. My laptop's, I only bought it like 3 or 4 years ago, but that's where we've reached of technology where your phone is more reliable than your and faster than your computer. That's why I'm on my phone. It's a little awkward.
Yeah, you could really be a nomadic trader now. So
there's no reason
be anywhere.
There's no reason to use your laptop over using your phone nowadays. Literally, your phone is more reliable than like Windows 10. Even though, I mean, my laptop's fine, but the smoothness, like I've got this S9 is it was hell getting off Sprint. Like I left Sprint finally after like 12 years. I stayed dedicated to Sprint because when I was in Katrina in New Orleans, the only phone service that still worked was Sprint, and I happened to be on Sprint, and I was like lending my phone out to people. So it really psychologically got me stuck with Sprint. But then their customer service started getting worse and worse and worse, and their prices kept going up, and it became just like the worst company in the world. And that's another sort of sunk cost fallacy. I mean, here's the thing: like with Donald Trump, I supported Trump up until the election. I thought he'd pivot a bit after the election, but since then, maybe from watching Fox News constantly or some weird echo chamber, he's gotten more and more focused on one particular demographic, which is his conservative baby boomer demographic, which is it's like he's boiling himself down to a very specific target audience and how he talks. If you look at like the Apprentice, he didn't behave like this on The Apprentice at all. Remember all those board? I don't know if you watched The Apprentice. I watched like almost all of them. This is like a totally different personality because he's structuring it for the boomers. And the problem is, we have lots of confident boomers out there, but we don't have a lot of confident millennials. We don't have a lot of confident Gen Xers, and all these, a 70-year-old who's super confident about money, that could only do so much for the economy because they need to start taking that money out to pay for their medical bills, to pay to retire, and all their confidence, that's great, but you need more confidence for, something that's going to boost the confidence of younger people. And you can't just, and there is sort of a vacuum being created, but there's just enough with his demographic, like he's got them so energized that older demographic is probably why I think he has a good chance of holding Congress in the House, because they're going to go out and they're going to vote because he's got them feeling that, the U.S. is under invasion and it's going to collapse and Antifa is going to attack you in the Denny's parking lot. And it's like he's so good at selling fear with people.
Yeah.
That's just enough to push
All
him
right,
over
we're gonna try and get off some of the political stuff of this, Matt. But I appreciate you coming on and real interesting looks on.
I'm making the point why the market is more fragile than it looks, because it is the optimism of
Trump.
Older Trump supporters and all the optimism. They don't have that new income coming into their pockets to back it up. So yeah, we'll see another spike of that if he wins, and we're seeing it now. But that's like Harry Dent, like you brought up earlier. He points out it's that optimism it's fleeting, unless that optimism translates to all the younger demographics underneath. That's one of the reasons the market's fragile. So I wasn't just trying to attack Trump.
No, I'm not saying that, Pat. I'm not saying that, Matt. That you are. I just wanted to kind of wrap things up here. Right. And I appreciate you coming on and some real interesting looking charts that you provided. And want to thank you for being here. And good luck. I'm going to be watching these things into the election, and good luck on the gold, and good luck America with everything that's happening in the streets. So want to thank you for that. And I also want to thank our audience today. And if you took the Turnaround Tuesday trade in the euro, you could take half now. You're up 28 from the opening. And the Dixie, you're up about 24. Take half, pull stops to BE. Thanks once again, Matt. I'll keep in touch with me on Twitter, and I hope your trading goes well. And you get your triple in Litecoin and gold continues. I'm looking for a place to buy it myself, and appreciate all the input you give me on Twitter throughout the days. And
I think fundamentals, all charts aside, I think fundamentally, 1150, 1159 in gold or 1160, that's the area where it's real. You should really start. We may not get that again, but if we get it, if Republicans hold Congress by one seat, I think 1160 just is my. That's an area. Now, if they lose Congress and gold goes, rocketing into the stratosphere, you're going to get more pullbacks. I'll keep you updated. I'll tell you, but never. There's no reason to go chasing it unless there's some huge natural disaster or huge event. You never want to chase anything, as you know. You're a very experienced trader, but there'll always be a pullback. So some other level, some other pattern will be. So, but yeah, thanks for having me. I really appreciate it, and good luck to everyone here as well.
Matt?
Yes.
Still there? Okay, so we're going to look at some pretty good political history coming up here in a week. So you're gonna vote, right? I mean, people that complain about things and don't vote, there's something wrong with that picture, isn't there?
Yeah, I'm registered. I'll be voting.
Okay. All right. Well, Matt, good luck on all of your trading and everything that you do here. I just want to show the community something here before I say goodbye. I did change my battery. So this was the euro at the face opening down here in the 50 range. So about 30 there. And the Dixie was up at this candle, just starting to turn red. That's working. So turnaround Tuesday successful. Hope it helped you guys. And Matt, what a great interview. You could follow Matt at Panama Orange. And his charts are like artwork. So thanks once again, Matt and F.A.C.E. And remember, everyone, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Thanks again, Matt.
Thanks again, you. I'm glad to be here. Thanks.
Thank you, buddy.